TFNN.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all have had a fantastic day, a fantastic week. Oh yeah, we're about to be wrapping this whole thing up, which is very nice. Gonna have a nice weekend, TGIF, as Tom used to say. Taking a look right now, with a tight neck for some reason. Looking at the SPY, you're up 0.65%. Man, I mean, just look at the price action. I mean, this is the indices, man. This isn't just some random, stock that sells off on bad earnings. I mean, this is, yes, the SPY. My gosh, insane. Complete parabolic movement to the upside. We were getting very, very near some of these kind of strange patterns, really, that we saw in January, which, if you recall, we were talking about that. It seemed very toppy, without a doubt. And, well, you can see what happened afterwards, of course. I mean, again, keep in mind, I mean, this was all occurring, obviously, with some capacity with the tariffs and everything. The actual tariff news, again, is this massive kind of drop down here in this area, right? So it is interesting to me that we are getting back up to these levels. I still thought these things were toppy. I am concerned we are a little bit toppy as well. But listen, there's some kind of interesting developments, right? A huge slew of deals for everything. Again, right back with AI and tech. Again, this just rings as 2022. Again, to me, with that kind of behavior. I mean, you can't argue against it, right? The earnings are there. And these companies are positioned very well, cash-wise. It seems like there's still a demand. We build out things with the Gulf Arabs, and you have NVIDIA opening up a place in Shanghai, which, there's movement here, okay? I still think there is somewhat of a risk in some capacity, big tariffs. Anything could happen at any time, but this is an interesting reaction. Again, I think the fear of a very hard recession is kind of at least gone out of people's minds right now. The data we've been receiving, of course, has been skewed in every way by the fear of tariffs. One of the things that I think is positive is, of course, we were looking at some of the shipping routes and how a lot of the ports, especially on the West Coast, were basically empty. You had a lot of kind of moored ships out in China. The shipping containers, the amount of ships coming to and from those ports is steadily increasing again. So that is, of course, good. It does seem, at least for a lot of things, that companies basically ate any kind of increase into their margins. Of course, that won't be the case for everything. We have Walmart. Of course, they come out and say, hey, we're going to have to raise some of our prices. You haven't really seen the price increase from tariffs yet. So, of course, that could be some kind of destabilizing catalyst. But, do we have a playthrough again of everything that happened? Like, okay, you know what? Never mind tariffs on everyone. Of course, you still have to deal with Japan and Europe, which, of course, can cause some kind of instability for sure. I mean, definitely with Japan, if we do things that they perceive will cause inflation for them, of course, they will, increase the interest rates, and that can be very bad for liquidity in the U.S. to some extent. So I'd be watching that kind of stuff. Europe itself, I don't know. I really, Japan's kind of more of the big thing. I was reading a really interesting report on what Europe is seeking to do. It was annoying in some capacity. This is talking about building out their military capabilities in a sense to kind of decouple from the U.S. in some capacity. They are focusing. They've tried to do this multiple times. By multiple times, I mean 2 times. They have tried to really establish a pretty competent European Union army, right? So it's a little bit different than Germany's army or France's army or whatever. But actually like a European Union army. And it really became just this, both times it became this large, just kind of bureaucratic mass that was very ineffective. War games and all this kind of stuff. So they release a new paper, about $1 trillion of spend they are expecting, but over 25 years, which I think is strange. Probably going a little bit faster might be, but whatever. I'm not a European lawmaker. We'll see what happens with that. I really would like to see some leadership change in Europe potentially to unlock some of the business capabilities of Europe. Unfortunately, life just is kind of like cycles like this, right? Where Europe really benefited, from a lot of different things, and they were able to implement a lot of the systems that they enjoy today. At some certain point, those systems can get weighed down by any number of things, and you kind of have to flip back, right? So we'll see if they can reduce some of the restrictions that they have on business, some of the regulation, and maybe we can unlock some interesting, European innovation. I would love to see that, and regardless, the spending is there for the military. And again, I know over 25 years, 1 trillion is like nothing. And in my opinion, I think that is kind of, that's very slow for whatever reason. But you still have Germany and France building it, right? So it'll be interesting to see what kind of happens with the Euro defense stocks. I do anticipate them breaking off, with things like AI and compute. They really, really need to do that for themselves. And I would love to see something like that. Of course, taking a look at Nebius, that being one of the big players that I think can benefit. You're 5.52% in Nebius. This is one of our loves on this show, and it has done quite well. Again, I am waiting for, kind of to see what happens with the mixed shelf offering, and if we get a major pullback. How this equity behaves, I think it's starting to get a little bit more institutional kind of attention, I guess. What it had done in the past is really comes up and then some news kind of comes out that you should anticipate with a company that is really growing like this, and then it has a very strong downdraft in it. That would be a beautiful time to get into Nebius. I like this company. I like the leadership. I think they're positioned now very well on their balance sheet is positioned very well. I think even with some further dilution, or let's say they get a line of credit somewhere, I think they're going to be okay. The demand is clearly there for this kind of stuff, right? I mean, even with like CoreWeave and everything. And I mean, again, CoreWeave is increasing CapEx in a major way, and they're defending it, saying this is what we need to give our, clients what they want. And that bodes well for things like Nebius. Big time. Folks, if you stay right there, we'll be right back. Talk a little bit more about this, talk about some data center equities that I'm very happy about. We're going to talk about those. So you stay right there, and we'll be right back.